With the price of crude gradually rebounding, including today's rally up to nearly $50 a barrel, is it finally time to circle back to the beaten-down pipeline stocks, even if they don't have anything to do with the price of crude? This group's been crushed, courtesy of worries about lower energy prices and the possibility that the Fed will raise interest rates, making the high yields of the pipeline stocks less attractive. Over the last week, they started to make a comeback, though. Take Enbridge, which operates the world's longest crude oil natural gas liquids pipeline system, running through Canada and the United States, along with a major natural gas gathering network. Here's a stock that plunged from $54 back in April down to $35 and change just last Tuesday. But in recent days, some rationalizations come back in the market because this stock's roaring, climbing back to $43. Even after this rebound, the stock still sports a generous 4.3% yield. Now, Enbridge, like most pipeline companies, is much less exposed to the price of oil and gas than most people would think. It's more of a toll road operator that makes its money based on volume. Plus, last month, Enbridge dropped down a bunch of its pipeline assets to a master limited partnership subsidiary, Enbridge Income Fund, something that allows the company to get a lower cost of capital as it spends tens of billions of dollars to build out the new pipe, of which there's strong demand for. And that, in turn, allows Enbridge to consistently raise its dividend. In fact, the company has some of the best dividend growth in the industry, with the payout forecasted to increase by 14 to 16% per share from 2016 through 2018. That's double what most of the companies I follow in this industry is going to do. Has Enbridge finished going lower, or is it a dead cat bounce? Let's take a closer look with Al Monaco, President and CEO of Enbridge. He's going to explain this to you because there's a lot of misinformation about this sector. Mr. Monaco, welcome back to Mad Money.
Thanks, Jim.
Good to see you.
Nice to be back.
All right, we've got to straighten this out. There are some companies that have built a lot of pipe that are levered to oil, and there is less oil being pumped right now. There are other companies that have built a huge North American pipeline system that is the way to play the cheap natural gas in the country. That's you.
Absolutely, Jim. In fact, that's exactly what we've been telling investors over the last 2 days in Toronto, New York. The headline for us these days is the resiliency of our business model. And that's driven by a few things. Certainly, the fact that we've got a low-cost structure is a big one. We're connected to the right basins. And importantly, we deliver to the best markets. You're directly connected to refineries, and you've got low-cost infrastructure there that really provides a tremendous advantage. But I think the biggest issue is the commercial underpinning of our assets.
Right.
And the fact that we've got a low-cost structure allows us to really gain in this kind of environment. In fact, in the environment we're in today, we're extremely well positioned.
Well, I mean, natural gas stayed at a 15-year low. People say, oh, well, that is just horrible. But you want people to use more natural gas, and that's what they do when natural gas is cheap.
The fact of the matter is, and you look to our utilities, a great example in the Toronto area, 2+ million customers. The natural gas commodity has a huge advantage over other fuels, and that allows us to keep building that franchise larger and larger. You're absolutely right. The unconventional resources we have in North America are unparalleled, and natural gas, being low cost at this point, gives it a tremendous advantage relative to other fuels.
We've championed Cheniere Energy for a long time. Now, they're going to need a lot of natural gas. You're going to supply a lot of it.
Well, you know, Cheniere is one example of the LNG export capability in North America. And that is a great point, Jim, because it's amazing that in North America, we don't have connectivity to the rest of the globe.
Right.
We've got this tremendous resource base, but we don't have connectivity, either for natural gas in enough quantity or certainly for crude oil. So you've got huge resource base, but you're not connected to the rest of the globe. It's actually very frightening.
Now, natural gas liquids, people don't understand what that is. But this is a source that plastics are made out of. We got to be, at this point, we have to be the lowest cost producer in the world. We have to be cheaper than Saudi Arabia.
Very much so. It's second or third in some cases and number one in other cases, Jim. You're absolutely right. This feedstock cost at this point in the cycle is extremely low, and that puts another competitive advantage at play for North America relative to the rest of the globe. And that's what's going to spur more natural gas production going forward.
All right, so Al, then we got to circle back.
Okay.
The stock went down as if it were a big producer of oil.
Yep.
Okay, and that all it really does is build pipes from Bakken and build pipes from Permian. How is that possible? How could there be such a misinformation and an imperfect security, given how stocks are supposed to be relying on all the correct information?
You know, I think there's been a reaction here for sure, simply because there's been mass selling and it's been indiscriminate.
Yes.
I think what we try and get across is this. Look, we may have the threat of higher interest rates, We may have low commodity prices right now. We've got issues around China's growth and all of that. Our point of view is this: regardless of all that, over the next 5 years, there's a very high degree of predictability that our cash flows are going to grow. And that's simply because of the business model and the resiliency to these issues that are out there. And frankly, that's how we built the business model.
Why don't people think that you have a consistent record of boosting the distribution? Why are people questioning that you can do it?
I think, as I said, Jim, in this market, I don't think it matters that much. You've seen selling across the board. But that's why we have to continue to tell the story.
And that's why I'm glad you're here, because it's good to hear somebody rational talk about this. I've seen the sell-off. It's just astoundingly stupid. Thank you so much to Al Monaco, President and CEO of Enbridge, ENB, the most reliable producer of higher distributions year after year after year. Stay with Cramer.